Hello there, welcome to the business report for Wednesday. So Japan's central bank will report its meeting minutes after keeping its key short-term interest rate unchanged at minus 0.1% at its June meeting, and its 10 years government bond yield target as well at around 0%. But we're just going to be digging into the details and see as to why they came to that conclusion. We've also got the UK public sector net borrowing to digest. It is expected to come in smaller after the UK government cut its annual public borrowing by more than it had initially thought last month, with the lowest figure since the financial crisis. Now, it's been a big day. The Bank of England Governor Mark Carney, he had some rather sobering realities when speaking at Mansion House on Tuesday. Britain's worrying debt and deficit, some of them very high indeed, and sterling fell to a one-week low after he said that Britain isn't ready for these higher interest rates just yet. Let's move on and talk about the US existing home sales. There we are. May expectations are set to come in slightly lower. Now, interestingly, higher priced homes continue to be more in demand than any other right now. Oil is a key theme for this week. It's these inventories. Now, there's lots going on, but we've already witnessed this week oil hitting a 7-month low. That's really as investors, they worry about this US output growth issue. Now, the rise in US oil rigs continued as well for a 22nd week, with the Baker Hughes data showing that another 6 oil rigs were added in the last week to Friday, despite the fact that major producers in OPEC and Russia, they are cutting their production. But the market remains well oversaturated, and oil storage around the world is in a surplus without a doubt. Let's move on, because we've got some more news coming from down under because of the time difference just here, and this is when we're going to digest this one. It's the New Zealand, the RBNZ interest rate decision, which is expected to remain at the current level of 1.75%, as there are no forecasts that we are expecting a change at all. And with housing inflation growth stagnant right now, an exchange rate drop of about 5% since February, a weaker outlook is expected. Then we have some corporate data to watch out for. It's rather thin on the ground in terms of the corporate data coming out this week, but we do have a few that could potentially move the markets. We have Barclays coming out, which announced back in March that its profits for the year would be ahead of forecast, which was a strong update that came hard on the heels of a share buyback plan. Now, the election result, it clouds the outlook for the UK, and while the MPC voted 5-3 to keep rates on hold, a notable shift to the hawkish side that we saw, economic weakness and Brexit negotiations make it unlikely that we will have any rates anytime soon, and certainly Mark Carney reiterated that today. Thus, the environment for house builders remains positive, and even the current easing in price could prove positive as it entices more activity among home buyers. Whitbread is another key one at the moment, and it's another company that tells us a lot about consumers and the environment in terms of the economics. And for this one, it's a difficult environment because investors have to get used to lower growth rates and the likes that you were used to have when we had some sort of 23% of cost of coffee. That seemed to be the norm once upon a time. Now, at the moment, the situation is this. Wages are rising, but costs are rising even faster, and that's because of the weak pound. Now, margins are likely to keep coming under pressure, with planned savings for this particular company of around £150 million. It's only going to be trying to make up the difference between that margin difference. Then we have Hornby as well. It's the British model railway brand. In terms of the US companies, we've got Oracle to look at right here. It's an exciting company right now because it's heading into the cloud, as we know. It battles with huge competitors though in this zone, with Workday, Salesforce, Microsoft is coming in as well. It made this decision to transition into the cloud about 4 years ago, and investors will be wanting to see how that is progressing, because as I say, it's a very competitive market because there's a lot of money at stake when you're talking about the cloud. That's all for me. Thank you very much indeed. That is the agenda for Wednesday, so lots going on, and I'll see you tomorrow.